I do think there's a huge potential with AI at the moment. It can do a lot of that heavy lifting. You can't run the grand slam of trading without a coach. A good trade at times will not be profitable, but a good trade is a trade that you followed process. If you're doing really well, you're looking at about 30% return a year. That's really well, and that also surprised me. As I've also had outlier years where I've made north of 100%, but I've also had years where I make.
Okay, welcome back to the Trading Battle. I'm your host, Steve Ruffley. Today's guest is a rare breed, a PhD who's fought in the trading trenches, run brokerages, and now rewires the trader's brain for success, Dr. Robert van Eyden. Over his career, he's taught, presented, researched, published, and blogged everything stock market related. He's the author of The Badass Trader. He has led and managed 3 stockbroking firms and 1 international CFD provider. His trading journey has now come a full circle, having initially applied artificial intelligence in predicting and selecting stocks to AI when it is infancy, to practicing the significantly more straightforward going back to basics approach, and by following a well-defined trading strategy while eliminating any emotion biases. Good stuff. I'm going to start, as always, Rob. Every one of us traders has our trading journey, how we got started, our story. What's yours?
I started in an interesting way. We lived in a street, and there was a gentleman who drove a yellow Corvette and a Corniche Rolls Royce. And after a while, I figured out that he was a stockbroker. And I said, wow, I also want to drive a Corvette, a yellow one, and a Rolls Royce. I still haven't achieved that. But that was my entry into the stock market. From a parent's side, they didn't know what the stock market was. But I quickly started learning. And back then, I got involved in technical analysis. I was still at university. I was studying technical analysis. And back then as well, technical analysis was a bit of a dirty word in terms of predicting future price trends. It was all fundamentally driven. And if you mentioned technicals and charts, it was akin to reading the tea leaves.
Sure, yeah, I've definitely got that. Yeah, when I first started, a lot of the floor traders had come onto the electronic floors and candlesticks and things like that. It's very much mumbo jumbo. I'll tell you what's really interesting about your story as well. I first got introduced into trading. I was living in Gibraltar, and I met some guys in Porto Banús, and they had one of the guys had a Ferrari, and I asked the guys what they did, and they said they were traders, and that's how I got involved in trading. So it's really interesting listening to people's stories. That a lot of it is just sometimes a bit of serendipity, a bit of luck, how you just stumble across what you end up doing for a living.
No, absolutely. It seems that, cars back then had a huge influence. And,
Mm,
if you think about The Pursuit of Happiness as well, that whole movie is based on, it was played by Will Smith,
yep.
who actually saw a guy in a Ferrari as well and said, how did you get the job? And then he ended up working for Merrill Lynch. And, he started, the guy in the book as well, started, one of the biggest broking firms in Chicago based on a car.
Yeah. I mean, again, we're blokes. You know what I mean? It's kind of what interests you. Interests you. Yeah, that's good.
Yeah.
That's great. So, I mean, I guess artificial intelligence is a massive thing at the minute. AI, the AI boom. You were in the kind of its infancy. It says, explain to me when that was, what it meant to you, and how you applied it. I guess to trading.
Yeah, so while studying at university, there was a professor that took a liking to me, and we had a commonality, which was the stock market. And he basically convinced me to stay on as an academic. It was nothing I ever considered in my life. I don't think anyone dreams of becoming an academic. And then to advance in academia, you have to complete your master's and your PhD. And while I was doing my master's, one of the things with a master's degree, once you've finished your thesis, you have to come up with a recommendation. And I started picking up the word neural networks. And the funny thing is, it's still an error in my master's. I even typed it wrongly. I called it neutral networks. But anyway, long story short, they said I need to get a PhD if I think I should stay in academia, which at that time I thought was quite a good opportunity. And I started looking at neural networks. I am based in South Africa, but I did get bursaries to study in the US, and I actually studied at the University of Carnegie Mellon and at the University of South Florida looking at neural networks back then. So it wasn't its infancy. It's the things I learned now, which I learned in the past, are basically common knowledge. They would probably teach this to a first year student, but it was quite new. And I was quite excited because I followed everything from technical analysis to fundamental analysis to complex systems. And forever I was looking for the secret sauce. And I thought this was the secret sauce, as
Oh,
we all are.
yep.
And so with a professor at the University of South Florida, I developed a model to predict shares, and it really did well. I was very impressed, and I thought the yellow Corvette and the Corniche Rolls Royce would be around the corner, and it didn't happen. And the reason why it didn't happen is the reason why AI will work for a period of time, and I will explain my views in terms of the relationship of AI being the master and the slave. So when I started, I thought it would be the master. The problem in financial markets, they are open systems. AI really works well in closed systems where you can control things. Financial markets are open systems. They are driven by human behavior. And AI and back then neural networks really worked if markets were trending and there were no exogenous shocks to the system or unexpected shocks to the system. They fail miserably like all other systems do when there are shocks. So, for example, this year we had the tariff shock, we had the Ukraine war, the attack on Ukraine, on Iran, etc. So those things, no neural network, no AI can predict. It's just impossible. So my journey has involved quite a lot, and where I do think there's a huge potential with AI at the moment. So AI as a predictor, probably not a good idea. So as master, no. As slave, yes. So what I mean by slave in terms of creating code, it's a wonderful thing. I use TradingView, and I've gone to ChatGPT and I said create code for me. It creates code. It can do back testing. It can improve code. It can
Hmm.
create alerts. So it can do a lot of that heavy lifting. But if you're looking for a turnkey and you're looking for the secret sauce, given at the sound of sounding repetitive, we are in open systems, and no open system will be captured by anything, including AI.
Yeah, that's really interesting. Yeah, I have to agree. Not that I'm a AI expert at all, but from being involved in the trading floors, there was a lot of people had grey boxes, black boxes, the kind of early kind of adapters of not AI as such, but kind of trading systems. I even had a guy who was a PhD himself, a rocket scientist, that had written code in his own language that said that he was had got this amazing system that could beat the stock market. All he needed was me to back him with £100,000 and he'd make money. I said, well, if you're that confident and a rocket scientist, back yourself. But then I think that goes to show with a lot of traders as well that a lot of people are more interested, as you say, from the academia side in some respects, in being right more than making money. So as you say, while it's the market's still open and driven by people, emotion, fear, and greed, etc., that systems might not necessarily be the best way to make money. They might be easy to sell and make people that sell the money, but will they make money in the markets? Well, I think humans still have a massive edge. That's all very interesting. But you're talking about your own trading and use AI, and you say stocks. So you're primarily a stock trader, or do you trade the kind of FX and indices as well? I mean, what would you mainly trade?
So I think my journey has also changed quite a lot. So initially, I started with stocks, and then I moved into CFDs, contract for difference. And for the listeners, they're not available most countries. They're available. They're not available in the US. And that was basically CFDs on stocks. The problem with CFDs on stocks is that if there are opening gaps, you could actually risk quite a lot of money. So I have, over the time, I've moved across to more day trading, and I trade predominantly indices. So I would trade the DAX, the NASDAQ, um, the South African index, the top 40, and I use an open range breakout strategy. So I just trade an open range breakout, which, if I told my younger self this was the method, I probably wouldn't have believed it because my younger self wanted high win rates and wanted complex systems. And this is pretty much like any open range breakout, as you mentioned the word, being right, that has also quite shifted in the last couple of years. I do not have to be right all of the times. If I'm right 45 or 50% right, then with a good risk to return ratio, I'll be doing well. So I've moved away from CFDs. I've moved away from stocks and only trading indices.
That's interesting. Yeah, I'm a DAX trader myself, primarily. So I think I found that myself. Really going back to basics and trying not to overcomplicate the markets. I mean, there's so much information, as you rightly said. Trump. I mean, what's your kind of view on the fundamentals driving the markets right now? I mean, how do you factor that into your trading, or do you discount it? Well, what's your views on Trump? I guess.
So I do look at it. I do look at it, but if I get a valid entry and a high probability entry, I would take it. But if I'm aware of news, so for example, as we're recording this podcast, the whole debate about tariffs, with Japan and Europe, the only thing I would do is I will scale back my risk quite a lot. So I usually trade with about 1% of capital per position. I'm currently trading with about a 0.5% just to scale it back.
Yep. Okay, we've heard a lot of traders talk about the 1% and yeah, scaling back over volatility. When you say day trading, I'm very interested because I'm a day trader myself. What's the kind of average trade time? How long do you hold positions for? Because we have a lot of traders that say they're day traders, but then hold overnight positions. Where I think a day trader has to be trading within the daily range.
Yeah, it's an interesting question. So day trading, you know, uh, the DAX in South Africa opens at about 10 o'clock GMT too. So I would be trading and I would be trading the DAX till New York close. There have been some good moves. In terms of a thing that I learned with my CFD trading, uh, if a position is profitable, then I would move it across to a swing trading system, which basically, so then I would move the position, I would scale back the position appropriately and then move it across to swing trading. This is a system I learned from my days of CFD trading. So ultimately, if I get good positions in on my open range and they work out and the trend is in my favor, it becomes a swing trading. And for swing trading, yeah, not longer than 3 months. Otherwise, whatever you want to call swaps or interest will kill you.
Yeah, no, okay, that's interesting. So, I guess when it comes to the kind of institutional style trading and retail trading, obviously you've done both. So what's the main kind of, I guess more for our listeners, what's the main thing that you've learned from both that might help people that are listening today to benefit from their own trading? Because obviously a lot of people are going to suffer from lack of capital and maybe the kind of scalability side of it. So what's your view on helping retail traders? What's your kind of main points to get across for our listeners today, that benefit from your range of experience?
Yeah, I think with both of them, you need an edge. So an edge is basically where your average winners over time are greater than your average losers. If you do not have an edge, it's not even worth trading. And an edge is a function of your win rate and a function of your risk to return or risk to reward rate, depending which one you use. So if you don't have an edge, so the question is, how do you determine if you've got an edge? You can do it two ways. The one is through back testing. So that would be the first starting point. And then secondly, there's a lot of debate about demo trading. Um, you could do demo trading as well. There are some good demo trading accounts that are quite strict in terms of maximum drawdown, maximum loss. So they would kick you out if you breach those. So I think for institutional and retail, you need some sort of edge or some sort of statistical edge. Then the second thing, the big difference between retail and institutional is risk management. The advantage with institutional is that you usually have got a risk manager. So there is a person, an external force out there that actually would tell you now to close down your position. And if you don't close down your position, you basically lose your job. So it's forced. There's no debate. There's no yes or no. You just get told. Where the problem in the retail world is you are managing yourself. And the easiest person to fool is oneself. And we come up with these wonderful stories why the position will turn around, and it did it last time and I cut, and the stop loss might be too tight, etc. So that's the big thing. The big thing, and obviously capital, and I can talk about capital as well in terms of the opportunities out there with funded accounts. I can talk about the advantages and disadvantages, but the big thing is you need an edge and you need to manage risk honestly and consistently.
Yeah, that's definitely something that's been a theme of other traders who I've interviewed. Yeah, myself, I've been a risk manager on the floors, so yes, I was the guy giving you the call, and nobody liked it. But it's a necessary evil of trading, and just because you stopped out in the morning doesn't mean you can't trade in the afternoon. I think you're exactly right with your point that a trader has to be not only the trader but also the risk manager. So you've got to wear two hats, and you're so right that people love to trick themselves and say like next time it'll be different. And you're right with the kind of demo accounts. You need those rules as well because you can blow 10 demo accounts. It doesn't really teach you anything because obviously you don't feel the emotion. And money's just money numbers on a screen. There's nothing like trading your own money for the first time to kind of really test you and then kind of figure out who you were. So obviously you're a published author as well. So the badass trader. I mean, how did that come about?
Steve, that's also quite an interesting story. So I've been publishing for the last 6 years, consistently on LinkedIn. I started with Trading Principles, and I think I'll be publishing number 310 this Saturday. And then I got a request out of the UK from a UK publisher. I will not mention names, and the reason would be obvious. And they said, would I be interested in writing a book and incorporating the principles, which I actually did with the Bad Australia. The second part is the first 100 principles. I said, sure. And Steve, you know how this works. You need to send in a proposal, a draft in terms of your chapters, who your audience is, etc., etc. And then after about 2 weeks, they rejected me. I thought this was quite strange. You actually asked me to submit, and now you're rejecting me. And then the seed was actually planted with publishers. I have published. I have self-published on Amazon twice, but not with a publisher. And then I reached out to a couple of publishers. I'm still waiting for two or three to respond after 4 years. And then, yeah, my publisher at the end was Penguin, and they liked the idea. And I was actually shocked. I was absolutely shocked because I thought, the horror stories that I've heard in terms of how difficult it is to get a book published. And that's how it started. And then in terms of the title, so it was initially the book was to be called Unbeatable Trader. And then the publisher didn't like the title. And then out of the blue, I was just thinking, and I said, Badass Trader. I did not believe that they would accept this title, and they did. And that's how we ended up with the Badass Trader. But deep down, it's still Unbeatable Trader.
Oh, okay, that's a good story. So, what are the kind of main principles then? What's the kind of? I know I've read a couple of books myself, and I hate it when the publisher clearly hasn't really read the book, or the team hasn't read it. So they just kind of like do the generic stuff. What's the kind of key points you'd like to drive home from the book for our listeners?
It's written in two parts. So the first part is where I look at the principles, of successful trading. I go into capital preservation. I go into risk management. Then I spend a lot of time in a chapter in terms of calculating your edge. So I provide the readers with formulas in terms, Excel formulas as well, in terms of managing an edge and creating an edge. And then chapter 3 is basically managing yourself. I spend a lot of time in terms of one of the biggest fears that has crept up in the last couple of years, which is FOMO, and in terms of managing that. Um, And then the second part of the book is basically the principles, that I've taken from LinkedIn. And yeah, I put in about 100 of these principles. So the idea would be that, someone reads a principle a day. But all and then I was actually forced, which wasn't the idea, to come up with some trading methodology. So I added my CFD methodology, which I traded with stocks. The reason why I felt that I didn't want to put it in the book was basically, that's what people want. I remember my younger self. I wanted to get the magic formula. And the problem with the magic formula, this is my magic formula, and it's evolved over a couple of years, and it's my style of trading. And my style of trading is not necessarily anybody else's style of trading. And then also my risk management and my risk profile is also very different. So I did put the chapter in, reluctantly, at the end. And ironically, the most queries I get on the book is on that chapter. But again, it's my style of trading, and it doesn't mean anything. It's the same thing. I remember many years back when the secrets of the turtle traders were exposed, the moving
Yeah.
average, or oh, I was so excited, I was so excited. And then I realized, I can't trade that way. It's not applicable for me. There were some gems in the book specifically on risk management and average
Sure.
true range. But it's not, so I discarded it. But I can't tell you how excited I was to eventually get, I think the book was called Turtle Trading. And the seed was planted in one of Jack Schwager's book, The Market Wizards, where he talked about the turtle traders. And gosh golly, there was no indication what they did. I was so upset. I spent a lot of money on this book, and this whole book was about psychology and nothing about win rate. And I wanted the magic formula. Later on in life, I realized, you know what, um, it's trading is about psychology and not the win rate.
Absolutely, for sure. I mean, we've had a lot of people and conversations about personalities and, exactly, kind of risk appetite as well. I mean, do you think that people's personalities are almost indicative of the style of trading they can do? I mean, do you think that, well, I mean, obviously you've talked about the kind of neurological kind of side and rewiring traders' brains. Can you make different personalities be different types of trader? Or do you think just people are born to a style of trading? And what's your kind of thoughts on that?
I would go, it's very difficult to rewire. If you can't deal with day trading, you shouldn't do it. I think for most people, end of day trading is probably the way to go. Uh, the late Van Cake Top actually had a personality profile in terms of the work he did. And it was very clear from the work he studied as well, and the book he wrote, I think it's called Financial Freedom, that there are personalities, there are different personalities, and effectively you can't change it. It's like the Myers-Briggs personality. If you're an ENTP, that's who you are, and you need to manage that. You'll never become a ENTJ, for example, and that's with trading as well. If you're not suitable for day trade and you can't handle the risk, or you can't, you're not in a position to sit in front of the screen the whole day and monitor, you shouldn't be doing it. So that's also a journey a lot of people, move through. Um, and in the book, the one thing I wrote in the book is you have to be very clear in terms of why you are trading. If there's no why, you shouldn't get involved. And a lot of people get the whys wrong. The obvious why is, I want to earn a lot of money. I want to earn it very quickly. And that's not the case. There should be more of a why in terms of trading. You want to provide a second income. You want to get financial freedom, for example. And like any why, it takes time.
Yeah, I think that's the one thing that people completely discount in trading. You're exactly so right. I've mentored so many people that say, they want the big bucks, but trading, you can get rich quick if you spend a lot of time doing it. People don't want to put the initial effort in; they just want the results straight away. And I think I've probably only met one or two traders who made it big extremely quickly, and only one of them managed to keep hold of the money. So it is a common theme through traders. I mean, obviously, you must have mentored plenty of traders over the years. What's been the hardest thing to kind of make traders overcome? I mean, I think what I'm trying to get to, I think the markets have changed quite a lot in the last maybe 5, 10 years of my trading. So a lot of people have come in and they want to get involved in crypto. They want to get involved in the next big thing. So, I mean, what from your experience has been the hardest thing to bring new traders that are coming through and point them in the right direction of things that are going to give them the edge and give them the higher probability chance of surviving in trading, not just making money, but surviving in order to get to that point to make money?
Yeah, so, it would go back to an edge, that you do have an edge. If there's no edge, you're gambling. And again, as you said, you've seen traders and I've seen traders that have made a lot of money very quickly and then lose it. The problem is they think they've got an edge and they think they've got a process, but they actually don't. So I think the biggest thing, in the last couple of months as well, uh, the the words that resonate the most with me is that you need to honor the process. Whatever your process is, so, to your question, people don't have a process. They jump around, they move around, then it's crypto, gold was hot about a month ago. Now it's indices again. They hop around. It is best, for the first 100 trades to make sure that you've got an edge and honor the process all the time. I write about in the book about good trades and bad trades. A good trade at times will not be profitable, but a good trade is a trade that you followed process. And we get bad trades as well. So a bad trade is where you do not follow process, but you make money. Ultimately, after each trade, you should say if it's a good or bad. And the aspiration should be that you get 100 good trades that you followed process, because then the beauty of compounding starts kicking in. You will have a row, you'll have a couple of losing trades. You could have 3, 4. I know traders that have had 11 in a row. But I've also, the flip side is you could have 11 winners in a row, but you need to honor the process.
Yeah, I think definitely, yeah, that's where you're going to get the consistency and the confidence in the system to kind of continue. So, I mean, what's your kind of advice for traders, and what about yourself when you've gone through periods of drawdown? Is it just going back to the system, or is it kind of trying to resist the kind of desire to tinker with things? I mean, everyone's going to go through drawdowns. I mean, from what you've seen and what you've kind of helped people through, what are your kind of key points on that?
I think the biggest lever, with drawdowns is, firstly, you need to understand that they will happen. Um, and a lot of people that get into trading think it's a one-way track. You will just have winners. You will have drawdowns, and some of them can be quite deep because, again, as I mentioned, the reason why AI will not ever 100% work is that we're dealing with open systems. Things can happen overnight, things can happen during the day, which cannot be predicted. And your stops will be hit and sometimes beyond your loss levels, but at least you put in a stop loss. The thing that I usually do is, if I move beyond, let's say if I've lost about 5% of my capital, then I aggressively reduce the risk per trade of the next one. So I would go from, I trade 1%, then I would go 0.5%. If my capital drops to 7%, which means I probably need to make 15% to get it back to zero, then I reduce it to 0.5%. And if the trend starts changing, then I start ramping up risk. So the only lever I've got is risk, because I believe, if I've got an edge, you will have these periods that it won't work. And if you believe in the normal distribution curve, on either side, you usually it will work 75% of the time. And then on the extremes, you will have losses. And then on the other side, you will have a couple of winners consecutively.
I guess one of the biggest questions I've kind of encountered over the years is when people want to replace income. And it's always a very tricky kind of, kind of road to go down, because everyone has their own personal expectations, their own personal expectations of how they want to live the life. I mean, what advice or kind of guidance would you give to people that want to take up trading full time?
Yeah, I also get that question. So, there are a lot of heuristics out there. So one would be, at least have 1 year's worth of savings. That would be one thing. And then also be realistic in terms of the returns. If you're doing really well, you're looking at about 30% return a year. That's really well. And that also surprised me. Because if you look at, the Instagram and YouTube, you'd be thinking you could make 3-4% a day, which is not possible. You would have outlier years. I've also had outlier years where I've made north of 100%, but I've also had years where I make 20%. So you need to basically work on worst case scenario and say, okay, if I'm going to make 30%, how much do I need to put away to cover my costs? Because trading per se is stressful. And then if you still need to trade to cover your costs, it becomes more stressful. And that's when you make risks and reckless trades. So, one option that has popped up in the last couple of years would be prop accounts or funded accounts. So that is an option. I think it's a worthy option, and there are some really good funded account and prop shops out there. There's also a myriad of horrible ones out there, so you need to do your homework. So that might be an option. To buy one of those challenges, pass the challenges, get into verification, and then you've usually got access from about $50,000 to about $200,000. That is an option that you're not risking your own capital. You're only risking, a small percentage, let's say $200 to $500.
Yeah, sure, absolutely. I mean, it's not really an area I've ever touched on myself. I mean, I started as one of the original Revco grads, so as one of the original prop traders, and their kind of idea was, here's some money, trade as much size as you can, as fast as you can. So it's kind of, there was no rules, no limits. There was just like, go big or literally go home. So when I kind of hear that word prop challenge, I'm thinking, okay, that sounds interesting. But then when you read into the kind of the details of it, they're much more kind of structured on the way you can trade and stuff. But I think what always kind of amazes me is in this kind of space, especially for the retail side, is that you talk about maybe 30% return, 100% return in a year. I mean, if you're doing that, you're doing better than most hedge funds. But the reality is, if you're starting, with a retail account of even $10,000, which is a lot of money for people, not a great deal of money to live off. So, you have to really have access to that capital. So I think there is room for the prop kind of side of it. But, what's your advice for guys that kind of maybe have saved some cash and do have the capital, but can't make that leap? Because that's what I always find the most difficult, is that a lot of retail traders split into two parts. So it's the traders that have the money, maybe a little bit older, and want to trade to make money, but more for entertainment and fun. And those people that want to kind of replace income and have the money, but are too apprehensive about making that jump of losing, kind of employment and committing to the full-time thing. So it's really a balancing act. I mean, I don't know if there's really a question there for you, but I mean, if you've got any experience or maybe kind of, I don't know, any thoughts on the traders you've mentored of like how people make that gap from wanting to do it for fun, wanting to do it for money, and working out in their own head why they're actually doing it.
Yeah, it comes back to be very articulate in terms of your why. If you need to be very, very clear, is it replacement of, potential money? Is it a second income? Is it a full-time income? And then based on your why, in terms of how you would approach it, I think again, just moving back to the funded accounts or the props, one method would be that I haven't mentored anyone, but I have picked it up quite a lot on various podcasts, is that a lot of the funded accounts, they would, if they succeed at funded accounts, they would take 20 or 30% of the profits and then shift it into an actual trading account. So that is one way. So if let's say you've got limited capital, um, if you are willing today to take the funded or prop route, then you can build up capital there. But the trick is, and where a lot of people also go wrong, they don't take out. I think they keep on building, and then the problem as well, the count grows, and then the risk actually increases instead of decreasing, and they don't take out their profits. So that is one way of building up actual capital, is using what I would say a core satellite approach, where the core would be where you take up a challenge, you succeed at the challenge, and then you start harvesting your profits from your prop or your funded account into your actual account, and you build it up like that.
Yeah, that kind of makes sense. Yeah, when you're looking from that perspective, yeah, I never really kind of thought of it like that. But yeah, you use your profits to use your fund your trading account. I
Yeah.
think, from speaking to other traders as well, I mean, it kind of resonates. They have to trade business, well, trading like a business, really. And I think a lot of people, as you've said, rather, straight away just focus on the end game, the end goal, the car, the money, but they don't really have a business plan or, kind of daily, weekly, monthly goals. That's certainly something I go through with my traders. And I think, it's not fine line because obviously the way you talk is very methodical, very calming. I can tell watching you trade or sat behind you the kind of style of trader you'd be. Then that comes back to the personality thing. So I mean, I guess from the other perspective, when you say you've managed stockbroking firms and a CFD provider, what have you seen on the back end that's kind of shaped your view of the markets? Have you had any insights that have being kind of like light bulb moments, they're kind of seeing the other side of the business, what other traders do.
Yeah, and the side that I've seen is publicly available because if you, for example, go into UK regulated CFD providers or FCA providers, they need to indicate on their websites how many of the traders actually lose money, and the statistic is anything from 75 to about 80%. And with CFD trading, that, I can attest to that as well. I've seen I've seen that statistic actually play out most of the time where I have been. And then the reason for that is basically, it's quite simple. You know, at where I've been, I've actually mentored clients, and then I'm absolutely surprised at a couple of things that have come out. Not actually having a system, not applying stop losses. So, letting it run, and there are two schools of thoughts about putting in a stop loss, and I've heard both, but I believe in stop losses. I believe in trading stop losses. So people, they trade on, I don't know, feelings, news, whatever they've heard, no stop losses, and then they they bet all their capital on one trade. So there's no risk management as well. And that's been consistent. And that's why that statistics of 75 to 80% actually has not moved over time. And which is surprising because, most online trading platforms and stockbrokers spend an enormous amount of time on education, and you can, from beginner to intermediate. And if you go into YouTube, there's some really decent people that want to help. This thought only arose to me about 2 months ago, is that expectations, we are driven by expectations, and these expectations lead to fear. And the fears we've got is basically the fear of missing out, the fear of taking profits off too soon, the fear of not actioning a stop loss as well. So it all boils down to erroneous expectations, which links to the reason we do not have a clear why we're doing it. Because if we had a clear why we were doing it, then we would not be, linking our why to expectations, because the expectations are all based on social norms at the moment, or social narratives, which we know are very misleading in this game, because we know the people that are selling these courses and selling these signals uh, based on social norms. A lot of these cars are rented, the clothes are fake, the venues are fake, etc. Uh, but interesting, when I started getting involved in the trading, my guiding light was win rate. It's changed from win rate to social proof. So, Steve, if you can show that you've got a Ferrari and you wear very expensive French clothes, etc., that is the proof that you are successful. And they're so far from it. So, social proof, so win rate has shifted to social proof. And I think people are getting to the markets for the wrong reasons. They would probably, yeah, honestly, they are gambling, and they would probably be better suited to gamble.
Yeah, I totally agree. I mean, do you think that kind of coincides with the popularity of social media and things like that? I mean, I don't think people talk as much to people. I mean, at the end of the day, when you met, through a stockbroker, I met through actual traders. I met people. I went to a floor. I turned up to a place, and that's where you went to work. Going to your bedroom and calling yourself a trader is not the same as going to work, is it? So, even the chat rooms and kind of told to people online, it doesn't hit home the same as somebody sitting you down and saying, "This is how I trade. This is trading. This is what you should look at, not necessarily what you should do."
Yeah, I agree with you, but the funny thing is, in all endeavors of life, we believe to get coaches. If I wanna learn to play golf, I get a coach. If I wanna play tennis, I wanna get a coach, except with trading. It seems that people don't understand that you do need a coach, someone that knows what they know, because when you start with everything in life, you don't know what you don't know, and then you know what you don't know. And a lot of folk actually don't move to the "I don't know what I don't know." And this is one of the biggest paradoxes for me as well in everything, even the professional tennis players. We just finished Wimbledon last week. If you look at the teams, with Sinner or Alcaraz, they got like 4 or 5, different coaches. Steve, you and I, you're New Zealand, I'm in South Africa. We probably both enjoy rugby, but you've got a kicking coach, you've got a psychology coach. All winning teams have got coaches, except when it comes to trading, people aren't willing to pay for coaching, and it just surprises me.
Well, what I found, what most amazes me, and some people have listened to things I've done, is that I tell people things, they listen, then they go and do whatever they want anyway. So it's like, why bother talking to anybody in the first place if you're not going to listen? Well, I don't know what your experience is, but I think it's, for me personally, a lot of males have this ego and they can't get outside the ego. It's like, yeah, I've decided I've got to be a trader, so I've got to be in this persona. I've got to be tough. I've got to be, kind of unyielding. I will make money. I've got to be arrogant. And it's like, well, yeah, go for your life, mate. If you're going to be like that, then the market will eat you alive.
Yeah, the problem is I think there's a bias called the Dunning-Kruger effect, which basically means if you're an expert in one area, you believe you're an expert in another area. And the problem with trading on face value, it looks very easy, and that's the problem. So if I'm a very successful entrepreneur or very successful, I've had a lot of successful sports people that think, oh well, this is quite an easy thing because I've
Sure.
got mental discipline and I've been doing well in sport and I've got that, and then they move into trading and then they just blow it up. And
Yeah.
and that's the problem. It's a totally different skill set, and it's not an obvious skill set because like I write in the book, we have to rewire it. In professional sport, it's all about winning. In trading, it's not always about winning. It's following a process. And there's no rah rah, and there's no cup at the end of the day. It's you and yourself and your capital. And again, it's I write about in the book, trading is the hardest, easiest thing, and therefore you attract people that think they can get into it without coaching, but they would never ever think of it, if I want to start learning to play golf or tennis, or let's say they would get a coach. All the top tennis players, they've got coaches, and I really don't understand when you say, you need a coach for trading. They like, and you've also been in it. They would balk at the idea and say, "But why?"
I think yeah, it does amaze me. It really does. But it happens all the time. And as I say, people will come to you and then not listen. I think the other thing as well that I've kind of noticed a little bit later on in my kind of trading career. That's why I do things like this, like interviews, speaking to other traders. It's a very lonely game, and you can't really talk to anybody about trading who isn't a trader and expect them to understand. So, I mean, how do you deal with the kind of the periods of isolation? Have you got any kind of tips or kind of tricks that you've picked up along the way just to kind of keep yourself motivated and keeping the momentum going?
Look, I'm still managing a business, so that keeps me quite busy during the day, and so I'm still managing a business at the moment. But I think from if you're full time in the game, it's a common thing that I've heard on numerous podcasts. How lonely it gets. And I think ways of overcoming it. People start structuring their days a lot better. So, for example, um, go in the mornings, do 2 hours of gym, for example, or meditation or running, and take breaks as well. And I think a lot of people actually, I listen to a lot of podcasts, but also make a lot of time just to meet people in person who are traders, because I cannot tell you how much I've learned from people. So, for example, on the DAX trading, as well. I spoke to a trader and, I wasn't having a lot of success on DAX trading on the opening range breakout because it's quite a volatile thing. And then he said, "You know what? My experience is I use the London opening range, not the German one." And just applying that, and I would have never picked it up. So to your question, I think you have to structure your day. You need to meet other traders, go out for coffee and things like that. Because the problem is your friends don't get it. Your family doesn't get it. At a point in time, you just can't explain it anymore because, the narrative out there is that trading is gambling, and which is true. There are more losses and more um, tales of people losing money than making money. So I fully agree. It is a lonely endeavor, but you have to, like what you're doing, you're interviewing people as well. And you know what? There might be one gem out of this interview for both of us. And, that takes us forward for next, for a couple of days, and we might back test it or things like that.
Yeah, no, exactly right, exactly right. And I think you can get very tunnel vision. Some of the things I wrote about, especially things like technical analysis. People get snow blindness. They read so much that they don't really know what to put on the charts anymore. It just becomes, it all contradicts each other. Nothing gives you a clear signal anymore.
Yeah, I think, that was my problem as well. Initially, when I started, I read the books of John Murphy and Edwards McGee. Then, you start building up, and then you move from simplicity to complexity. But ultimately, everything is a derivative of price, because and that we don't understand, and some, follow price through like moving averages, and but it's a function of price. So, if you keep it simple, and that was my journey as well, because the more I started dabbling in technical analysis, and then back then, it was adding quants, so it was basically, adding formulas, and then you move up AI or neural networks and genetic algorithms and fuzzy logic. And ultimately, the best system is a simple system that you understand, that has got an edge, and you execute it consistently.
I totally agree. Yeah, something you can replicate. Yeah, totally. I mean, it's been great. I mean, that's been great. We could probably talk all day, but I guess is there anything else you want to kind of you think we've missed out? You want to kind of you think you want to cover or talk about?
I'm not a trading coach. I know you are a trading coach, but the one recommendation I would make is that anyone should invest in a trading coach. It's probably the best money, and that you can spend, and people should honestly consider trading coaches. As much as Federer and Djokovic, all of them have got coaches, and they've won Grand Slams. You can't win the Grand Slam of trading without a coach. That's very clear. And it also helps in terms of a lonely endeavor, because now you've got someone that you can chat to, and someone that will listen, and someone that would guide you.
Yeah, no, no, I totally agree. I totally agree. I think I've had it kind of both ways, from the kind of the excitement of the floors and the kind of both on and off the floors. You have to reach some kind of balance, really. There's the professional camaraderie, sharing of knowledge, and the kind of being part of a bigger thing than yourself. But then also kind of being able to be comfortable in yourself to be able to press the button and trust your own instincts. But I think, yeah, you're exactly right. A mentor and someone that's kind of been there and done that can kind of like help you put it all together. So I think that's what a lot of people are missing is that they have certain elements and they just don't really know how to put it together.
Agreed. No, I can't fault your thinking with that, and that's probably the biggest, the problem. And if you read in terms of the success psychology, one of the biggest things is that you need to invest in yourself. So people are very keen to attend these rah kind of psychologically, I'm the best and I'll beat tomorrow. But when it comes to investing yourself and for your trading, I don't know. There's some blockage. As you said, I think, ultimately, if you want trading success, you need a coach, you need a mentor, whatever, however you want to define it. Otherwise, you are not going to win the grand slam of trading.
I mean, it's been a great interview, Robert. I really do appreciate your time. Is there a way people can kind of get in touch with you? Are you on socials, or is there a good way to kind of be people can contact you?
Yeah, I'm quite active on LinkedIn. So they can follow me on LinkedIn. So that's probably the only one that I do at the moment. Like I mentioned, I publish trading principles once a week, and I've actually started publishing more general um, trading ideas. So I publish about 3 times a week on LinkedIn, and then my book is available on Amazon. And then if you not interested in reading the book, you can actually the audio is available on Spotify.
Sure. Yeah. Well, I'll be sure to get a copy myself and give that a read for sure.
Great. I would appreciate that. Thank you. And
No
I'll
problem.
definitely read your book as well.
Sure. I'll send you a free copy, mate. I've got loads.
Okay.
Okay, well, it's been an absolute pleasure, Robert. I really do appreciate your time. I think it's some great insights for our listeners, and for you guys listening. If you've enjoyed this, don't forget to like and subscribe. And I will be hosting my usual kind of podcast every week or so. So look out for them. And it's been a pleasure. Okay, thanks for joining us, Rob. Goodbye.